Good evening, everybody. Uneducated Economist here. Was reading a really good article coming out of Seeking Alpha talking about the limited amount of government debt coming from the Treasury, seeing as how we were running into the debt ceiling. So the amount of bonds that the Treasury was auctioning off was very limited, and banks were using gold, because gold is now a Tier 1 asset, as part of their asset sheet in order to meet the Federal Reserve requirements for their stress test. Very interesting article. The author goes on to say that once the Treasury starts auctioning off new treasuries, you're going to start seeing the price of, well, you'll probably start seeing the price of treasuries start to drop a little bit as the new flood of treasuries come into it. But they're saying that the gold prices are going to start dropping too, as the banks will no longer be seeking out gold as far as needing the asset to put on their asset sheet. I think quite the opposite. I think, honestly, as the Treasury starts to issue out or starts to auction off these new debt, I feel that bond investors are probably going to hold back a little bit and see if they can get better yields as the prices start to come down. And if banks start to recognize that and gold holds its own or maybe even rises during that time, then they may even just hold on to the gold since they're allowed to hold it anyway. Anyway, thought that was a very interesting article. You guys let me know.